Well, this time around, as we examine our grain trade, I want to welcome to the show Todd Bubba Horwitz of BubbaTrading.com in the Chicago area. And Todd, always good to visit with you about our trade. And you have been cautioning folks about getting overexcited about any kind of move here lately, whether it's a big move down or it's a big move up. And then we have the Fed coming into play in the sandbox this morning, and they took the interest rate down 0.5 point. You get the knee-jerk reaction up. I think we had, what, a 1,000-point range already in the equity markets this morning. It kind of tugs around here on the ag commodities, but it seems like things are finally getting their second wind, if you will, and stabilizing. Is that how you read it today?
Good morning, Marlon. Yeah, I do read it that way. I think the Fed is panicking here a little bit, but actually I think that'll be better for the grain markets and the meats, because again, I think that money that will eventually come out of the markets based on this will flow into grains and livestock, and I think we're seeing some nice basing. You know, yesterday we were watching 520 wheat, which was a major level, and it managed to hold, and of course it's higher today. Soybeans are now holding $9, which is important. And of course, corn, if it can close over 380 again, would be much stronger. So although we're still slightly negative here, I'm looking for a great spot to re-enter. I think this is probably it. And I'd like to see it hold here. I think we're going higher, but I do have to see a little bit more work done.
So, of course, a lot of talk has been focused on the fact that the U.S. dollar has been very strong versus other commodities. Now, it is easing back a little bit today after that announcement. And with the Dow chopping around as it continues to do, really, how much is it helping ag commodity export potential with the dollar the way it is, or is it still really hindering it?
I don't think the dollar is actually hindering it at all. I think the dollar is an overplayed excuse as to why markets go up and down. I think price decides what markets are going to do, and I think the dollar itself, it's been higher, and ag was much higher than it is now. So, again, I don't think that today it's the dollar. I think in general, you know, over a long, long haul, the dollar could come into play. But again, when there's demand for product and we're not so oversupplied, prices are going higher no matter what the dollar is doing. But right now we're still oversupplied and we've still got some issues.
Let's look at that corn market as it stands right now, where we have the May contract now gaining 6 1/4 again. We're back up to 381 3/4 after selling off there about an hour into the session. So that is noteworthy here. We have December 4 1/4 higher. On the soybean trade in the May contract right now, we're 2 cents higher at 9.03. We've been higher and lower in this soybean market, so kind of caught in the middle here. Now, when you look at Chicago wheat, it has been gaining back against Kansas City today. The May contract now up 6 at 529 1/4. In the Kansas City market so far, you have that May contract gaining just 2 cents at 459 3/4. Minneapolis May wheat kind of caught in the middle there, and it's been trading about 4 to 5 cents higher. Todd, when you look at this wheat market, do you think that the fact that we're going to be getting more moisture in the southern plains is going to be weighing on that Kansas City market a little bit?
No, Marlon, actually, I go back to the overall price action, and because we've been able to hold these key levels, to me it just indicates that there's some new money flowing underneath, and there's going to start to be a demand for the product. So again, it could have a very short-term minimal effect, but overall it really comes back down to the price action that the markets are showing. And because they're able to hold these key levels, I think to me it looks like there's going to be some buying going on here, and we're going to start to see, no matter what happens, a bump in prices, which is obviously good for everybody.
Sure, it's interesting to watch all those commodity funds positioning when they're exchanging their long and short positions all the time. All right, thanks for helping us navigate the waters today, choppy waters at that. Todd Bubba Horwitz of BubbaTrading.com.
Thanks,
located in Chicago. We'll talk to you again soon. We'll pause here. We'll come back in a moment, and we'll talk livestock right after this.